having us. I think the topic we are talking about today is actually a very interesting one, given what have happened the first 6 months this year. The question we are dwelling about is whether 2019 is the year of mega IPOs. We have seen Uber, Lyft, Zoom, Pinterest being listed all around the world, as in US specifically, and what is the impact we have in the tech world given all this mega tech IPO coming up to the market. Without further ado, I'll just give all the panelists some time to introduce themselves. Anuj, do you want to go first?
Sure, thank you. So my name is Anuj. I work at Macquarie Capital, so I lead the technology advisory team, doing mergers and acquisitions, capital raisings and IPOs in the APAC region.
I'm Shaun, Gregorio. I'm the co-founder and CEO of Frontier Digital. We invest in marketplaces in emerging markets, online classifieds. We're listed on the ASX. Prior to founding FTV, I ran iProperty, which was also listed on the ASX, and prior to that was with REA, which was also listed on the ASX. So long lineage of listed companies.
Kate.
Hi everyone, my name is Kate Galpin. I'm a business development manager at ASX, and my role essentially is promoting the Australian exchange, both domestically and for international companies to come down and list in our market.
Got it. I think we have a very good mix here. So Anuj coming from the financial intermediary side of things, Shaun been there, done that at iProperty and now at Frontier. Kate will be representing more from a view of Australian stock exchange, how is, I guess, bucking the trend of other Southeast Asian stock exchange having a growth in the equity capitalization on the exchange versus Singapore and Malaysia, where we do see a slight decline over the last few years. I think the first question I have to the panel, maybe Anuj, with the slew of IPO coming up and we do see trade tension coming in, do you have any views on whether this trend will sustain for the second half of the year, whether globally or in the Australia Stock Exchange?
Yeah, sure. So I think it's a really interesting market at the moment. We've got basically Nasdaq's at all-time highs. I think it's just had over 8,000, and even the ASX and other markets are at all-time highs. At the same time, we've got a very low, I think, unprecedented interest rate environment. So it's very low interest rates. So if you're a money manager and you're sitting there thinking about how do you invest your money, you don't really make money on yield or debt, so you have to go to the equity markets. That's where you get alpha or good return. And then at the same time, you're looking at stocks that are pretty much fully priced on the stock exchange. So I think that's what's making it a really interesting market for IPOs, because it gives you an opportunity to invest in good quality companies with some good growth prospects at probably a good price, and get into the story early. And I think that trend has got to continue. I don't see that macro dynamic changing this year at all.
Shaun, have anything to add, given you might have portfolio companies that's thinking of tapping on the public market, so on and so forth?
In terms of any headwinds at the moment,
Yeah.
to Anuj's point, I think we operate in emerging markets. I think over the past couple of years, emerging markets have lost a little bit of their luster. Combination of a lot of businesses investing in emerging markets and maybe over-promising, under-delivering. You do see some awesome businesses coming out of emerging markets, but I think the landscape's got a bit tougher. Not made easier by the trade wars, not made easier by the South China Sea, not made easier by Brexit, whole range of factors, I guess, that are playing into companies' performance, or more so how the markets are valuing them. But I think the great thing about the markets we're in emerging markets, is they're still growing rapidly. I think in developed economies, you're seeing some really sluggish global growth rates, which are making it hard. Interest rates down to 1%. But in emerging markets, we're still seeing really good growth.
Got it. Anything to add?
I'd say just like from our market, obviously, the headwinds, any uncertainty or any volatility, investors don't like that. So what we saw, which was a global trend in Q4, a lot of IPOs that were lined up to go public were postponed and put off. And then, this year, obviously, with the markets doing a lot better, a lot of those IPOs are coming to market now. So we're seeing very active pipeline.
So I guess the trade tensions also maybe just create more volatility, but having said that, I think the emerging market trends would still continue. I guess that's the consensus we have here. I guess then it brought up to the next question that we have here would be that given all these mega IPOs that we have for the first 6 months, especially the tech ones. We've seen many of them flopped. Lyft being one of them. Second is like Uber. Do you think it's because what do you see through in terms of these trends? Do you expect more of these private companies coming to the market and I suppose pass on the baton in terms of high valuation? Can they sustain such high valuation even post-listing, right? So any views to share, especially I think in Australia stock market, we do see a lot of tech companies being listed on them versus Singapore Stock Exchange or Bursa. Kate or Anuj?
Yeah, sure. So in the Australian market particularly, tech's our fastest growing sector. We've added over 100 IPOs in tech sector in the last 5 years. So we've seen a lot of activity there. I think the difference, obviously you're mentioning Lyft and Uber. I think the difference on the Australian market is, we list companies a lot earlier than they do in the US. So we're listing small and mid-cap companies. So a lot of what they're doing, it's not that exit, and a lot of the growth hasn't, already played through. So they're listing as part of their growth story and using our market to raise growth capital. One thing in terms of companies when they're newly listed, obviously, can come under some price pressure. We've seen that in the US. I think part of that, and Anuj, you might touch on this, is building trust with the new investor base when you go public. So, what we see is, when companies go public, quite often there'll be some movement there. Early investors might use it as a chance to get out. And then the company, the market's really waiting, for you to hit your milestones. So it takes a couple of reporting seasons to gain that trust and to, do what you say you're going to do once you go public. And the market's keeping a close eye on that.
Yeah, I think some of the examples you chose, sure, they traded down, but now, I think Uber's not that far down anymore. But there's been a lot of good ones as well. So I think CrowdStrike was 2 weeks ago. That's up 85%. I think Pinterest is up 40%. So it's a bit of a mixed bag in terms of, how they've actually traded since. And I think that just tells people that, I guess, pricing the IPO, you want to leave a little bit of money on the table, actually, to make sure that it trades well in the aftermarket. You get a good sort of demand from both retail and institutional investors day one. And I think that momentum is really good. In Australia, I think pretty much all but one IPO this year have performed quite well. So it's been a good market down in Australia.
I think the other thing to keep in mind is that there's nothing terribly wrong if you trade beneath your IPO price, right? At some point after your listing. I think what tech companies are finding now is that maybe go back 5 or 8 years and the need to IPO was about raising capital, and it was really strong, and you had limited options. I think now you're seeing a lot more private equity come into tech companies earlier, maybe pushing the listing back a bit. So you're listing companies that are slightly larger perhaps, and quite often fully valued. So when they hit the boards, you've got a lot of institutional money already there, and it's left to the retail investors who kind of cop a rough ride anyway. So you're seeing some companies fully valued, they list, maybe the valuation comes off a bit, and they've got to trade back into their valuation over the next couple of years. I mean, our company Frontier listed at 50 cents. I think we went into the 40s. 2 years later, we're at 80 cents. iProperty, which I ran a few years ago, listed at 25 cents, went down to 10 cents, sold at $4. So I don't think listing or trading under your IPO price is the end of the world.
Got it. And I think before we go into listing it, as in going through the whole process of deciding to list, right? I think a lot of founders today that's here or investors who have portfolio that's obviously still private right now. I do see a trend that, companies are staying private longer. Do you see the line between being listing and not being listed is blurring, given that there's so much money pouring into the private capital markets, right? Would IPO itself, like in the whole process of going listing to gain liquidity, is that dominant position of IPO being challenged in today's world, especially with data, with technology or new incoming platform, Fundnel being one of them, which operate solely in the private capital markets. But any views on that?
Sure. I think the US, we start with that market's pretty interesting. The Nasdaq's moved from being, typically a Series C kind of market to being a Series F market. But when you would think about IPOing, it's very much a mega cap market. You've got to be a $4 or $5 billion company to list on the NASDAQ these days to get any real interest and attention. So that has meant that in the US, people are waiting a lot more, and it's really only the unicorns that come to market. I think, whereas I think in this Australian market or some of the other exchanges, it's a bit different. The market's become more receptive, companies coming a bit earlier. So we're now seeing in Australia, you can list unprofitable companies in sort of growth stage, and so and I think that's sort of the dynamic that, because the NASDAQ's not available, people are looking offshore for that or in Australia and other markets for that opportunity. But then at the same time, I think there's a lot more private capital seeking technology investing. So there's a lot more options for founders, which is great.
I think the other thing from a founder's perspective, trying to raise money, when you talk about the equity markets and there's a ton of money out there, put your hand up if you've gone out to raise money in these wonderful equity markets and it was really hard, right? It's not easy raising money. And anyone who's raised money privately goes out there with this wonderful set process. We're going to start today, you sign your NDA, you get the IM, then you write your check. And it's a neat little 6-week process. Ends up taking 6 months, 8 months, a year. So I think for companies, the appeal of an IPO was that if you can do it, it has some certainty. It has a start date, it has a stop date, and you can go to the markets, go to the capital markets and raise money far easier than you can in the private market. So for us, we went through that private round. We did a couple of private rounds. And it's really hard. And then we got to the point where we had a bit of scale and you can say, right, could we list? And when you list, you open up a whole world of investors who all of a sudden look at your little company based out of KL doing stuff in weird and wonderful places, and you're legitimised in many respects, and you bring on a whole range of investors that you might otherwise have missed. So I think an IPO is still an attractive option, because I still maintain that it's really hard to raise money privately. You've got to be pretty good at it.
I think another way of looking at that is a lot of the venture firms, they might look at 3,000 companies in a year and do 5 or 10, right? Whereas if you're a listed market investor, you have to look at every IPO, because you need to be need that alpha for your portfolio. So, and you've got so many more investors that can actually participate in the IPO and they have to look at it. So it's a completely different dynamic, actually.
I think as well, I agree with that. For founders, to have more and more options is a good thing, and something that we see. Obviously, the IPO is a capital raising event, and so one of those rounds that it'll take 4 or 5 months to IPO. But one of the keys about being a listed company, and particularly if you're hitting your milestones, is the ease at which you can then come back to raise additional capital. So it's part of that growth journey. IPO's day one, and then after that, if you're communicating with investors, keeping people on board, then you can easily raise additional capital, and then that time that takes is taken away from management in terms of that 6-month lease of private capital.
I guess because for IPO, it's always like a lot of work. You have to hire a lawyer, hire bankers come in to do the work. So when would you think is the right time for you to pull the trigger? Because there are inherent costs involved as part of the IPO process, right? So when would, as in Shaun for Frontier, when do you make the decision? Okay, I'm decided to list now. It's a good time. Instead of waiting, I like to tap on the private market, but I market longer, because I think that will be the main questions where founders are looking for, including myself, right?
I think maybe it's a combination of a couple of things. If you go ask a broker, he'll say tomorrow every time. I think the reality is you either have to have a really good product, a really special business that's scalable and sustainable and high growth, or maybe you've got a reputation that you've earned over a period of time where investors follow you into another business. We were probably in the latter group where we'd run listed companies and we were able to cultivate a really good support from investors. But even up to that point, we were trying to raise money privately, and it was scrapping and scraping and hustling, and it was difficult. When we decided to IPO and we had a bit of scale, we were able to do so. Our IPO was oversubscribed 5 times. So we wanted to raise a certain amount of money. We had bidding 5 times that, and it was like day and night. So we went from scrapping and scraping to raise money privately. We pulled the trigger on the IPO, and all of a sudden, you've got people queuing up to invest in an IPO. I'm not sure a lot of them even care what the IPO is a lot of the time. Just the psychology of diving into an IPO is a pretty attractive thing for investors.
I agree completely. It's about the quality of the business, I think is the question. Once you've got a business that's an investable proposition, that's when you come to market, because you really only have one shot at IPO. You can't IPO 3 times. So you've got to come once, you've got to come strong. And you want to make sure that your investors on day one are a really good register, because they then support you for the next 5 years and all the other capital raisings and your share price after that. So you want to make sure you got something good to sell, and then you can actually deliver on what you say. I think it's the key things.
I think the other element to that you sort of touched on was a lot of people might see an IPO as a destination, like that's an outcome, it's the final thing you do. And I think for small tech companies, it's often very much a step in the direction of what you're trying to build. And to your point, one of the great things you see small cap rush to an IPO, maybe a bit early, and then find the environment of being heavily regulated, having to disclose your quarterlies, your half yearlies, being very transparent, and then they find it really hard to deliver on what they say they're going to do. And I think that's when you go a bit early and you find that it's really difficult, and you get punished then in the markets if you don't deliver.
I think that's true. Like, it's around the story, the reason why you're IPOing, when you're raising that capital, what the story behind that is. Quite often expansion, a new market, something like that. And back to Shaun's point, there's the continuous disclosure obligations once you're a listed company. So you want to have, some predictability and consistency in terms of, your revenue and profile of the company. So you're getting to that point where it is more consistent, because everything you do is going to be out there in the public market.
In terms of growth, because we do see some IPOs in Singapore or Malaysia, right? I think there are still, like you mentioned, your IPO was oversubscribed, right? Given a growth profile that you have. But I think in Southeast Asia, based on personal experience, I used to be in banking as well, and Singapore and Malaysia, they tend to favor a little bit more on the growth, as in stable yielding companies, rather than growth. The
word you're searching for is profitable.
Profitable, yes. And certain size, which exchange are looking for. But I do think that you guys have other options, right? Basically, if you decided to list, you can, I guess, list on Catalyst, which is, you don't have to be profitable. I think, in certain second board that we have in Southeast Asia versus Australia Stock Exchange. Or I do see some tech companies in Singapore that are actually going to NASDAQ for OTC listing. Right, so I'm sure when because you exited iProperty before, when you were thinking of listing Frontier, probably lots of banker come and pitch to you. How do you actually choose which board to list Frontier then?
It sounds like an infomercial for the ASX. But we found that the ASX is quite a large exchange. It's very listing friendly. So I think when you go to choose where you can list, first question is, can you actually list there? You don't probably get the luxury of choosing so much as finding somewhere where the regulatory framework suits you and you can list. And the thresholds for the ASX are, I think, around assets or turnover from memory, so you can qualify. And then it really comes down to building an investor support. And we were fortunate that the businesses we'd run before were on the ASX, so we'd cultivated an ASX following. So the decision for us was pretty easy. The NASDAQ's really sexy, the AIM board in London, there's lots of big exchanges, but you're too small a lot of the time. So to get on NASDAQ now, Anuj, is what, $1 billion? I don't even know.
I mean, you only get a look in at $3 billion.
There you go. And the ASX, you can probably list a $20 million company, raise $5 million. So it's an exchange that we could list on, and we've cultivated a following. And as you said before, you don't have to be profitable. You can be a growth business, which is what we are. So it suited us in that sense.
I think generally, I guess it's a cross question for all the panelists here. Given that you can tap on private capital easily nowadays, right? There must be other reasons for people to go listing other than just liquidity. Do you see a different trend in terms of why people are going listing instead of private, other than for the reason of liquidity?
It probably comes back to my point before. It's about the ease at which you can raise additional capital. So for companies that are looking at private rounds versus public, and what we often say to companies, for founders, it's important to have as many options as you can. and just weigh up, your private options versus a public option, whatever exchange that is, at the point that you're at. But once you're a listed company, as long as you do what you say you're going to do, I think, it's that follow-on capital is one of the key points. And obviously, in terms of it's a marketing experience in itself, an IPO, it gets put the message out there, the number of investors that you're exposed to. So in terms of the profile of the company, it's going to go up once you're on a public market.
Got it. I think I've seen the red sign flashing. Times is up for us. But may I just conclude what we have spoken about today in terms of staying, I guess, in this year, in 2019, is 2019 a year of IPO? I think for the first 6 months, it's definitely a yes. Whether companies in Southeast Asia should tap on the public market or not, I guess it's probably need to look at what options you have for the various exchanges. Do look at ASX, given that you don't have to be profitable for tech companies to be listed there. Explore about basically start exploring and decide when you need to tap on that public market versus staying private sooner than later. And some of the advice they provide here will be useful, I suppose. I think with that, I'll close the panel for today. I just want to add, I forgot to actually introduce myself earlier. So I run Fundnel. So Fundnel is a private investment platform. I'm kind of the opposite end of all the panelists here, so specialized only on the private capital markets. And we are licensed in Singapore, Malaysia, done more than 100 mil transactions through our platform. I think that's all for us. Thanks all the panelists.